This is not advice. I'm not your advisor. We're back. We got the scotch again. We're in for some doozies. Increase in income in 2020, and we cannot for the life of us figure out how to reduce our tax bill. Spent days reading through the wikis and the posts. Don't understand how you and your husband can be smart about your money from a tax perspective. You need help with how do you calculate your effective tax rate for 2020? Sort of curious why you want it, but basically you just have to run a tax projection for 2020. The software wouldn't be finalized, but it'd be close enough. You could, like, if you're doing your taxes for 2019, you could just punch in the 2020 numbers, and that'll be pretty close. 2, are your 401ks combined to be considered one for tax purposes? No, they're separate. Do we do a traditional or a Roth 401k? Did you say how much you're making? 240? Probably traditional. But if your income's only going to go up, maybe Roth, maybe split it. Are you getting a match? That's all going to be traditional. Hard to say. Probably traditional, though. 240 is pretty high. How much do we contribute to the 401k to reduce our tax burden? Well, I mean, as long as you're getting the match, I mean, the most you can put in will reduce your immediate taxes, but you're just deferring them, putting them in the 401k. Is there some reason that you want money outside of retirement accounts? I mean, you might want, like, money for a down payment on a house. I don't know. So it might not make sense to get it as low as you can. Okay, here's the rest of the info. 140, 100, married, dual income, no kids, almost 30. Okay, you guys are putting 17K in, or you did in 2019. Your New York City residents, ooh, that's high tax rates. Okay, I suddenly understand why you want to reduce them. You had a car lease and an HSA. Yeah, I mean, if you both max out your 401ks, you didn't say how much cash flow you have, but if you both max out your 401ks, that'll reduce your taxes about as much as possible. But if you don't want to have that money trapped in retirement accounts, then you shouldn't max it out. So it seems easy. The rest of the info is down here. But yeah. Next question. Are employer stock purchase plans worth it? I know nothing about stock purchase. See this option on the company website, but don't really know what to make of it. It says you can conveniently purchase stock through automatic paycheck deductions. You can choose a dollar amount up to $1,000 per biweekly pay period. Company matches 15% of the first $1,800 you contribute up to $270 per plan year. Yeah, I would do the $1,800 and get the match. And depending on some plans have a really interesting thing where they like freeze the value of it. You don't buy the stock each day. It sort of depends if it's a public stock or a private stock or how the plan is set up. So you should probably like just get the documents and read them and try to understand them, or ask someone to explain them to you if you can. But I'd say at least doing the $1,800 to get the $270 is nice. It's obviously riskier than like a 401k match or something like that, but it's the same idea. I'd look into it. Mother buying me out of my mortgage. So my mother has offered to buy me out of my mortgage. When she dies, you're expecting to get $1 million. You pay $1,200 monthly on the house. You're curious about the repercussions. You owe $150. You bought the place for $175. You still own it. Yeah, she's just gonna pay off the loan. If you sell before she dies, she gets the $150 back. That seems fair. If she were to die before that point, it just comes out of your inheritance. Yeah, it also seems fair. No, that all makes sense. I don't see any problems with that. I would just remember to say thank you.